Right now for the latest on the 2024 presidential race and the impact on investors and the markets. For that, we want to bring in former House Majority Leader Eric Cantor, who is now Vice Chairman and Managing Director at Moelis and Company. And Eric, no shortage of things to talk about here this morning. You've got lawyers delivering their closing appeals to the jurors in former President Trump's case here in Manhattan. And he is leading in the polls. Where do you think we stand right now? There was just an article from Politico yesterday that said that basically the Democratic insiders are running around in a complete panic.
Well, listen, I think there's so much baked into the discussion and even the mind of the investors in the markets at this point about the election. And so I don't see anything really changing where we are. Whether or not Trump is indicted, I don't think it makes much of a difference for the electorate because those who are committed to him will be even more committed to him either way, and those who despise him will continue on that. And I think what it really comes down to, as we've heard in some of the discussion this morning, it's about the cost of living in this election. It's about people's perception of how they're going to sort of manage through the high costs that they've been experiencing. And it's not the fact, Jared Bernstein was on talking about inflation coming down. The fact is, absolute numbers are still, it's 19% increase in prices since President Biden took office. It's too recent. It's too soon for people to think like, oh, well, things are great now.
All that may be true, but what do you think it is that former President Trump is going to somehow magically do and wave some magical wand that is going to change this outcome?
Well, listen, I'm not saying that there's any magic wand, and
we
all know how politics.
And that's the point, though. Right. That's the point.
We all know how politics works, and the big issues that we're going to have to confront as a country after the election is the fiscal, and they're calling it the fiscal Super Bowl. It's about the numbers. It's about tax reform, because most of the Trump tax cuts expire at the end of 25, creating net $4 trillion hole, net. So in over a 10-year period. And that's on top of the added costs of the interest bill that we're experiencing.
So what will Americans think? I was listening to a strategist this morning, Greg Valliere, on another network, talking about how when he sees it, it comes down to a pretty close run, except for that you do have momentum building for Trump in the swing states.
Well, I do think we are so polarized and divided at this point that most states are red and blue. We know where people live. We know how they vote. And so it'll come down to 4 or 5 states. And in my opinion, it also will come down to just a few localities or counties in those states, given the fact that Republicans typically do well in the rural exurban areas, Democrats in the cities. It'll be the suburban professionals in Arizona, in Georgia, in Wisconsin that are going to decide this vote.
And how does RFK Jr. play into that? Who does he steal more votes from?
Again, I think that the jury's still out on that, and you see both camps very worried about that because it's going to be like this. I think my gut is it ultimately anybody with a name like Kennedy, for voters who aren't paying a lot of attention, are naturally going to be more Democratic. And I think it probably hurts Biden more. That's my sense.
Well, let's talk about what you're saying to business leaders at this point. If we don't know what's going to happen with the election, but how are you telling them to prepare? What should they be doing?
Well, listen, I think one of the things that we're seeing, at Moelis is, it's just taking longer to execute on deals. And that has a lot to do with the regulatory construct and what's going on in Washington. It has a lot to do with Lena Khan and the FTC, DOJ. And I think that in any way, shape, or form, if there's a change in the administration, we're going to have a better and more clear regulatory construct when it comes to M&A. That's without a doubt. So now we just have to, folks are having to spend more time, more money in preparing for any kind of transaction because of the the unpredictable nature of the regulatory regime in Washington. So I do think that people are looking forward to maybe some relief there if the administration changes. And we just, talked about tax reform. That's a big one that people will begin to sort of bake into their thought process after the election.
But how do you game out the tax system when so much of what's said in an election year, nobody really believes they're going to do?
Well, I think This is the cynicism that surrounds the politics. But
good reason.
Right, and I think it's completely warranted. But you game it out. I mean, listen, we've got a corporate tax rate right now that puts us in the middle of the rankings, basically, in the industrialized world. If you recall, prior, even when I was there, President Obama even admitted that a 35% corporate tax rate was very non-competitive, and we were seeing all the inversions occur. But
also worth noting that when the Trump tax cut took place, the business community was prepared to very much accept a 25% corporate tax rate, and that it was actually Trump that brought down the rate to a level that everybody said, "Oh my goodness, I can't even believe it's this low." So before we say it's in the middle of the pack, let's level set about what's actually happening here.
Well, let's talk about the thought and the theory behind corporate taxes and what it means. First of all, the bargain was, if you will, if you lower taxes, like on corporations, you're going to broaden the base. That was the supposed pay for, right? It was the SALT tax. There was many other things that sort of helped broaden the base. But another thing about corporate taxes, the trade-off is if you're going to lower the taxes, you should have more money to pay wages. You should have more money to return money to shareholders, and you should have more money to properly price your product or service, right? I mean, there's all these trade-offs.
But this goes back to the pay for. How are you going to fill your $4 billion hole?
And at this point, I don't think it matters. I don't think there's a trade-off. I think it's all things when you look at the deficits we have today.
Well, I don't think there's any question about that, given the fact you're nearing $1 trillion in a couple of years when the interest costs of rates stay here.
It's going to be all of the above.
But look, if you look at the percentage of GDP that tax revenue represents, we are above the norm, which is about 18%. The problem is spending is that much more disconnected to the norm as a percentage of GDP. And neither party wants to have a real discussion about spending. And that's the disappointment, because if we really would go and confront the real problem.
Do you believe you're going to vote for former President Trump?
I'm a Republican, and I will be there voting for him, yes.
Okay. And do you believe that he's going to deal with entitlements or costs?
No, I don't. I don't believe he nor, if Biden gets elected, that he's going to deal with it. They've both said that they're not going to deal with it.
So eventually it's going to have to be the markets that buck up and say, you can't keep...
Well, look what happened in the 90s with Bill Clinton. I mean, the bond vigilantes came, and it was a force mechanism to have the parties sit down and figure out what they're going to do about entitlements. And at that point, remember, it was the welfare reform that provided actually much better policy results, and it added to the fiscal health. And I think at some point, when these trustees of these entitlement programs get and say, okay, you're going to run out of money, Congress will have to act, Washington will have to act.